Welcome back to Concept Learning. As you know, here we learn different concepts. Today we are going to talk about sources of business finance. What is business finance? It refers to capital funds and credit funds invested in business. For every business enterprise, there are two sources of business finance: owner's fund and borrowed fund. What are these sources of finance on the basis of the ownership that we need to understand? Owner's fund. What is owner's fund? The funds contributed by owners as well as accumulated profit of the company. For example, equity shares, retained earnings are the examples of the owner's fund. What is borrowed fund? Borrowed fund refers to the borrowing of the firm. It includes all funds available by way of loans or credit. Now let us see what are the different features of owner's fund. When we say source of permanent capital is feature of owner's fund, how? The owner's fund remains permanently invested in the business. It is not refundable like loan or borrowed fund. A large part of owner's fund is used for acquiring fixed assets. That is why it is permanent source of capital. No security required. It is very clear that no security has to be offered against ownership capital. The owner's fund is also known as the risk capital of the business, as the return on this capital depends upon the rate of earning of the company. In case company is incurring loss, then it is not compulsory to pay any return on owner's fund. The return on owner's fund varies with the profit earning of the company. That is why it is called as risk capital. Sources of owner's fund. It comprises of share capital, retained earnings, that is accumulated profit. So these are the features of the owner's fund. Now let us see what are the features of the borrowed fund. First, fixed time. The borrowed fund is raised by business firms for specific periods. These funds may be raised for short term, medium term or long term. Regular payment of interest is the another feature of borrowed fund capital. It is a legal compulsion on business firms to pay a regular amount of interest on borrowed fund. The payment of interest as well as principal amount is a legal liability of a company irrespective of its earnings. Third feature of borrowed fund is security. Generally, firms can get borrowed funds against the security of assets. Banks and financial institutions offers loans on different terms against the security of assets. Last feature of borrowed fund is control. Security holders do not get the right to control and manage the activities of the business firm. They have the right to sue the firm in case there is default in payment of interest or repayment of loan amount. So we have seen sources of business finance on the basis of ownership, under which we studied about owners' funds and borrowed fund. Now on the basis of ownership, the different sources of business finance are equity shares, preference shares, retained earnings, global depository receipt, ADR and IDR. And on the basis of the ownership, the various sources of business finance under borrowers fund can be debentures, loans from commercial banks, public deposits, trade credit, etc. So today we learned about sources of business finance on the basis of the ownership. As I earlier told, business finance refers to capital funds and credit funds invested in business. Financing means making money available when it is required. No one can start a business or run an enterprise without adequate funds. So it is very important to understand the sources of finance on the basis of the ownership and sources of raising finance. Thank you.